Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit and my name is Mathew. With me is Smriti, Chaudhary, and we'll take you through the next half an hour or so of trade. Let's take you through what's happening with the equity markets right now before we jump into the questions. And by the way, if you've got questions for us, you can send them to us on that WhatsApp number that you see flashing on your screen right now. But take a look at the benchmark Nifty 50. We started off with gains, but very quickly gave up those gains, and we're trading with cuts of about 1/3% or thereabouts. And this is despite a very sanguine look in the global equity markets, a positive handover from the US equity markets and also the Asia Pacific region, which is largely trading in the green. But do remember that we're not too far away from all-time highs on the benchmark Nifty 50. The broader markets are also trading not with substantial gains, but then they're still in the green right now, or holding on to those gains just about a nail's breadth or so in the green for the mid-cap index, a third of a percent or so for the small cap index right now. Take a look at the contribution for the Nifty 50 then, and you have ITC right on top of the list that is gaining ground and leading to some of those or paring the losses somewhat to a certain extent. Coal India, Tata Motors, ONGC among the other gainers. The heavyweights are actually leading the declines once again in trade today, and HDFC Bank the biggest loser and proving to be a bit of a weight on the benchmark. ICICI Bank is another loser in trade, and so is Axis Bank. Now, we are focused on another bank in trade today, and that is Yes Bank, and that's on the back of a significant upgrade, and it's trading still with gains of about 5%. Harsh is joining in to tell you about what brokerage had to say exactly what and why the stock is up. Harsh, take it away. Morning.
Hi, good morning, Alex. So you're looking at an upgrade, of course, not with regard to the rating, but just with regard to the outlook. It's upgraded from stable to positive, which is the Moody's outlook on Yes Bank. Reasons being, one, they believe that the depositor base as well as the lending franchise will help core profitability going forward. So that's one. Second is capitalization currently looks healthy, and that will likely fund growth as well. So there's some comfort around that. But most importantly, it's with regard to profitability. They believe operating profit metrics are going to improve quite dramatically for Yes Bank. So now, just with regard to operating profit metrics, currently operating profit to assets is at 0.8%. It's expected to improve to 1.2% in coming quarters. And therefore, there is positivity that maybe in the next 12 to 18 months that may happen. Reasons for that: one, priority sector lending rules. Now they're going to start meeting those rules. Therefore, OPEX and expenditure with regard to purchasing this PSL will reduce. Second is with regard to overall OPEX just on branches, etc. That will also come off. Higher yielding loans is what Yes Bank will do, and therefore improve margins as well as operating metrics. And last off, with regard to credit costs, that's post-operating profit as well, they believe that credit costs will get knocked off by recoveries coming through. Very positive overall, at least the Moody's note seems to suggest. It also indicates that likely there may be a rating upgrade as well in store in the next 12 to 18 months if some of these metrics start to play out.
All right. Smriti, you want to take?
Yes. Yeah. On that note, thank you so much, Harsh. On that note, let me introduce you to the guests for today. We have Mr. G. Chokalingam, founder and MD of Economics Research, along with Kunal Rambhia, fund manager at The Streets. Welcome to both of you, and thanks for joining in on the show today. Coming straight to you, Mr. Chokalingam, Yash pointed out so many reasons why the stock might be, from a longer term perspective, all the fundamentals seem to be improving for Yes Bank now. How are you viewing it, and is it a good time to get into the stock considering all the positives that might play out?
Yeah, I looked at Yes Bank balance sheet and operating performance in the recent quarters. It looks good. The pain has come down in terms of the quality of assets. It's able to maintain some growth also in business. In terms of price to adjusted book value also, it's a very comfortable level now. So investors who can wait for more than a year definitely can consider Yes Bank.
Yeah, that's a fair point. Do you want to weigh in, Kunal, on the price action in Yes Bank? It's up about 5% or thereabouts in trade today. But somebody looking to initiate a long position in Yes Bank, is that favorable?
Hi Alex, thanks for having me on the show. So if you look at the Yes Bank overall performance since 2020, this counter has not really crossed 28.5 to 30 kind of zone since 2020. It's been almost 4 years now. And we always prefer to invest in the counters which are in trending nature, right? So far, I don't foresee any new rally emerging at present levels. From short-term perspective, one can certainly think of initiating a buy today with the stop loss of 25 and the target of 30. But from long-term perspective, I'll wait comfortably for the counter to cross about 30 and then initiate a buy on every decline after that. Till then, I'll avoid this counter.
Fair point. The first question that we're taking today, and it's time to jump into the queries. By the way, if you're tuning in right now and you've got a question on equity, and if it is either a short-term or a long-term question, then write to us on that number. Make sure you tell us your name as well as where you're tuning in from. That is always helpful if we want to identify who you are, or rather you can identify that we're taking your question. Yogesh is writing in. Yogesh Pandey from Manawar, Madhya Pradesh is asking about Jain Irrigation, which he's bought at a low price of 14 rupees. And he's got 514 shares. The stock is currently trading at 78.17. Kunal, from a long-term perspective, he's not in a hurry to sell it. What are the price trends indicating?
Now, see, this was a perfect entry. And if I look at the weekly chart from the long-term point of view, the trigger was at around 24 levels. And since then, the counter is clearly in uptrend. There were patches in between on the chart where the sideways consolidation was seen, but otherwise it's a trending counter. So with a trailing stop loss of around 65, I would advise him to stay invested with this counter. The first level to watch out and be cautious will be around 120. Which is still far away from this level. So at 120, I would advise him to revisit our channel and ask someone who is available there and keep trailing the stop loss slowly. I think this trend might just continue for long.
All right, fair point. The next question is from Vijay Reddy, who's writing in from Delhi. The question is, they're holding IRCTC from levels of 942. It's currently trading above 1,000 levels. And exit from there and get into IRFC. From a longer term perspective, Mr. Chokalingam, would you suggest doing that, swapping IRCTC for IRFC?
I believe IRCTC is better than IRFC in terms of fundamentals and the business prospects.
Okay. Anything to add though about the valuations of IRCTC, Mr. Chokalingam? Would you suggest holding off on buying at these levels, considering the kind of run-up that we've seen?
Still, post-budget, I would suggest retail investors to be extremely cautious, particularly on PSU stocks and defense stocks, rail stocks. The valuation attractiveness is not there in most of the stocks. I mean, it's only the momentum play. So those who are willing to take risk, they can buy and participate in the momentum. Otherwise, I would suggest just hold, and fresh buy one can consider after presentation of the forthcoming budget.
Okay, fair point. The next question that we will take is from Vijay. No, we just taken Vijay's question. The next one is on Gold Health Limited. Actually, Medanta. Global Health Limited, Medanta. Bought at levels of 1371. This is Ashish Sharma's question. Should I hold or exit is the question. Global Health currently trading at 1259 or thereabouts. It's up about 0.6%. So below the buy price, Kunal, what should the strategy here be?
See, Alex, again, it's a very trending counter. I just saw the chart. I did not really look at this counter before. Just have a look at the low of 2022, somewhere 395, 400, and the recent highs are around 1500. And it's now been sideways consolidation for the entire year of 2024 so far. The strong support which I can see on the chart is 1120 and the resistance is around 1500. So if our viewers' view is comfortable for a bit longer time, then stay invested. It's absolutely a trending counter. By any chance, if you get an opportunity to buy near 1100, please average out. If the counter falls below 1100, then only it's the time to turn cautious. Otherwise, I think this sideways consolidation, which we can see as a time correction, might just continue for a while, but the trend might just continue again because there are no selling volumes as of now.
All right. The next question is from Satya. Kunal, coming back to you on this one, the counter is Sagar Cements. The question is, is it a good option now to buy the stock from perspective of 1 to 2 years, and they're looking for at least 25% upside in the counter? It's done about given about 20% returns in the last 1 year. Do you see that sort of upside of 25% in the longer term?
So just let's go back and see the price performance of last 3 years. 2021 high was around 305. From there, the counter came down to 190, again went up to 305, again 190. So it's a perfect range bound counter. I would advise our viewer to either initiate a buy about 300, where we can expect a trending move. Otherwise, think of initiating a buy near 200 levels, because that's a good support. Right now, it's in between. I mean, there is no point in initiating a buy at this level just because the counter gave a recent spike. Wait patiently for the price to reach near support and initiate a buy and have a favorable risk reward ratio.
Okay. Mr. Chokalingam, coming to you on HDFC Bank, and we've got Vijendra, who's bought at levels of 1600. And it's interesting, right? This counter went to a low, and then it recovered about 30% from that low point. But then you had the quarter performance or the business update that came a few days back, which was seen as a negative for the counter. And it's taken a bit of a beating since that point. It's currently trading, and correct me if I'm wrong, below one-time price to book. Is it still a good buy though, or would you wait for the dust to settle on the fundamentals? The question he's asking is, should he buy in bulk right now?
Yeah, there are a few things, about the HDFC Bank. First of all, it trades a little below 3 times price to adjusted book value, but that itself is at a heavy discount to historical average of HDFC Bank valuation. So there is no doubt whether short term, medium term, long term, it's a very attractive stock. The only problem is that this market is now dominated by 10 to 12 lakh new investors who are coming into the market every week, and it has now crossed 17 crore. Soon it's going to be above 18 crore. Number of investors. So majority of these new investors are chasing only the small and mid cap stocks, and we are not saying heavy buying from institutions also in the large cap. So therefore, my fear is that although I have a buy call on the stock, in the short term you may not make, short to medium term you may not make any meaningful substantial return. But this is a stock what every retail investor should consider, because historically the low point of valuation multiple, and not only that. Yes, the quarterly results we saw the business parameters on Q-on-Q basis a little disappointing, but I am pretty confident that the bank will maintain 15 to 18% profit growth year on year, at least for next 3 to 5 years. So therefore, for medium to long term, this is one of the most attractive, Sensex and Nifty stocks in my view.
All right. Next counter is an extremely popular counter. We seem to be taking this counter almost every day, which is Mazagon Dock. Coming to you, Kunal, on this one, the question is from Shalini. They want to buy from a 1 month perspective. Now, considering that the stock has run up already so much, do you see any sort of upside in the next 1 month, or should you maybe hold on to it? They're also talking about the whole shipbuilding space, counters like Cochin Shipyard and Garden Reach. Would you suggest buying it at these levels now, even from a shorter term perspective?
So it's a very clear, just look at the entire space. The counters have already delivered massive returns. I'm not denying the fact that the counter can't rally further from this level, but here the risk management part always comes into picture, right? Because any decline from the present level, say by even 10%, will make it little better in terms of valuation probably, and at that point in time, the entire world will enter. So from the trading point of view, I can always give a level for now. So on Mazagon Dock, I think the yesterday's bottom, which the counter made at around 5,200, seems to be a good support. Considering that, one can initiate a buy. As the counter turns favorable, keep trailing the stop loss and hold it till the time the trend continues. But if it goes below 5,200, from short-term point of view, I'll suggest an exit. Keep this level in mind and strategize your approach accordingly. Don't consider in terms of time, but consider in terms of levels for now.
Can you also talk about Cochin Shipyard in terms of levels? We have another question from Dr. Mayur, who's writing in from Mumbai. They've already bought the counter at an average price of 920 rupees. It's trading above 2,800 levels. What's the long-term target if you have one on this counter?
So now this is the power of holding the counters which are in trend and riding the rally. So first of all, congratulations to our viewer. Now, as of now on the chart, what I can see is 2,400 being a good support. Till the time it's about 2,400. I mean, the long-term point of view, it's going to be a hold. It's a perfect buy counter. Because as I just explained, right, any decline from the present level, say even by 10%, should not really be a worry or a concern for him. So considering that, 2,400 can be a good trailing stop loss, hold it. If the counter manages to make a new high, trail your stop loss to 2500 and carry the position.
All right. We have to slip into a very quick break, gentlemen. Do stay with us, and viewers will be back on the other side to take more of your questions, so do stay tuned.
Welcome back. You're tuned in to Ask Profit on NDTV Profit. The next query is on Aditya Birla Money. The question is from Lokesh, who's writing in from Mumbai. They bought the counter at a price of 132 in June of this year. So a month ago, it's currently trading above 160 levels. Coming to you, Mr. Chokalingam, on Aditya Birla Money, we saw stellar last quarter results. The company seems to be making waves, and from a longer term perspective, would you suggest holding on to a counter like this? Or maybe switch to something. Sorry, go ahead.
We are authorized person of Aditya Birla Money, so therefore we have a compliance issue in recommending the stock.
All right. Got it.
Let's take a technical view on AV Money if we possibly can. Kunal, what would you say about AV Money on the charts?
Absolutely. Again, it's a trending counter, and just to have a look at the typical pattern which I can observe on the chart is that it goes into sideways consolidation for 1.5 to 2 months and enters into a big rally again. By looking at the rally, if you initiate a buy, you're always going to be in trouble. So we should be accumulating this counter when it's in sideways consolidation, and the present phase is the one. Just support on the chart, which I can see is around 155. So with the stop loss of 150, one can initiate a buy and hold on to this position. I think this consolidation might just come to an end anytime soon. Above 175, we can expect the targets of 195.
Got it. All right. Akhil has got an interesting question. This is for you, Mr. Chokalingam, because we were having this conversation yesterday, and I think over the last couple of days there was a dramatic difference in the stock performance between M&M as well as Maruti Suzuki. Maruti was going from high to high, and M&M on the other hand was losing ground. Now, a lot of people have said that this is just the price correction or the price drop that was announced by a couple of these companies was just a trigger point to sell the stock, because the stock, Mahindra, has gone up, 60% or thereabouts in the year-to-date period. It's done incredibly well. But would you suggest buying one over the other? Akhil from New Delhi is wondering.
Definitely, I've looked at both, and I have studied this SUV business. M&M has been riding on SUV robust sales, but the price cut is an alarm for the investors. Probably, perhaps it shows the growth momentum in SUV segment is slowing down, and therefore I would give a sell call on M&M. And Maruti also similar case. In fact, it is slightly worse than M&M because within the passenger vehicle, small car growth is showing a deceleration, whereas SUV still continues to be good. So therefore, even it will have a problem, but still we have, based on the valuation, target price of 13,500. So I would give a hold on Maruti, sell on M&M.
All right. Mr. Chokalingam, the next counter is Jindal Stainless. The question is from Sagar, who's been holding it from levels of 32 rupees. It's currently trading above 780 rupees, 785 to be precise. Now, the question is, looking at they're talking about the metal cycle that seems to have turned now. However, the counter hasn't actually participated in this upturn. So what's the view in terms of this sector as a whole, stainless steel? How are you seeing that move, and specifically Jindal Stainless?
See, it is trading at around 20 to 23 PE. Fortunately or unfortunately, not only the Indian stock market vertically got shifted valuation, even the metal space saw huge upgrade in terms of valuation multiple. Even Hindalco used to trade at around 8-9 PE, in best case also around 10-11. But if you see most of these mid-sized metal companies, they are trading at even 20 to 30 PE. I may be wrong. I have a firm view that this is not sustainable. The market is cyclical, the metal business is also cyclical. So that is why all over the world, people don't give 20-22 PE for metal stocks. I would give a sell call on Jindal Stainless Steel.
All right. Particularly if you bought it at double-digit levels and you're sitting on tremendous gains, it may not be a bad idea to take some money off the table. This, by the way, is a very well-researched piece, because Mr. Chokalingam, he's talking about nickel prices as well. So I think he's done his research on the fundamentals and on the import value. Sagar's an old viewer of Ask Profit. Let's talk about Surya's question. He's asking about gas marketing and distribution companies. He's bought GSPL at levels of 280, and he's bought GAIL at levels of 118. Kunal, do you have a specific view on these two counters, and what would be the advice here?
So yes, I'm tracking GAIL very closely, and if you look at the price action on 3rd of June, when the entire market was up, this counter made all-time high of 233. It's again reached the same level. In fact, yesterday it attempted to break, but it was a failure. It's consolidating right now, but the trend is very much intact. So with the stop loss of 218, even anyone who wishes to initiate a fresh entry can do the same. The counter will pick up above 233, 234 levels, and the targets can be 255 levels. It's a trending counter, so buy on dip can be a good strategy, but even for momentum, one can capture above 234. It's a clear thumbs up for him.
All right, Kunal, the next counter is Chennai Petroleum. This question is from Chakravarti, who's writing in from Vijayawada. They bought the counter at 391 rupees, a significant profit there for the viewer. Would you suggest booking these profits, or should you continue holding on to it?
So, there is on a lighter note, I always say to my team also that profit booking in a trending counter is a crime. We should not be doing it. I mean, just look at Chennai Petro. It was a trending counter for the entire 2022-23. It's been in sideways consolidation since February so far, but trend is very much clear. It's intact as of now. And to our viewer, because he has initiated a buy at very low levels, I would not really recommend a profit booking right now. Rather, just keep an eye on the levels which are 875 to 900 kind of levels. Till the time the counter is above that level, I think he can comfortably stay invested with it. Once the counter crosses 1100 mark, I think 1300 to 1350 are likely as the target. So yeah, it's a clear hold as of now on this counter.
All right, we've got a couple of questions, both long-term as well as short-term, on RVNL. And Gopi from Chennai is asking about the long-term prospects, the next 2 years for RVNL. Mr. Chokalingam, this is by far and away one of the biggest tearaway stocks that we've seen in the year so far. And there are some comparisons that have been talked about, right? Where we're talking about if RVNL were to execute the entire rail budget, it would still, you would find it a little difficult to extrapolate the kind of earnings that it is projected to be having. So would you still buy, and what is the target that you would have for the next 2 years?
I'm sorry, I may be absolutely wrong. I would not buy most of these rail, defense, even majority of the PSU stocks. At least I'll wait for the budget. And I find, including RVNL, there is no valuation comfort.
So, okay, fair point. And I completely take your point. So then from that perspective, Kunal, these are all trending stocks. RVNL as well, right? It's going from high to high. Nobody's able to call the top. If you bought, for example, like Milan, who's bought 100 shares at 536, he's still in the green. What should he do? What should his target price be in the short term?
See, Alex, again, just on 5th of July, the counter was trading at around 420, and right now it's at 635. Kind of returns these counters have given for anyone from trading as well as investing point of view, it's just massive, right? So trail the stop loss right now to the yesterday's low. Now yesterday's low also is at around 560. Till the time the counter is above 560, I'll stay comfortable. I'll hold on to this position, and I expect the target of around 675 to 680. Near those levels, I'll probably book a bit of profit, which I have set for myself. But otherwise, for long-term investors, I think 560 can be a good trailing stop loss.
All right, 560 a trailing stop loss on RVNL. Thank you so much, Kunal and Mr. Chokalingam, for joining us on the show today. It was a pleasure having you both on the show. And viewers, thanks for tuning in. Thanks for tuning in. Hopefully, we were able to take your questions, and hopefully, if that was not the case, hopefully the questions that were answered are beneficial to you. But we'll be back on Monday, and you can keep sending us